Hello and welcome. It is the 23rd day of March 2017. It is a Thursday. My name is Derek and welcome. I'd first like to thank Brian yesterday for a Bitcoin gift as well as another anonymous one and all of the other ones in the past. Everyone who has rated these videos, commented on them, shared them. Thank you so much. So let's look into the daily chart. Written on the top, yesterday was the 6th day since February 17th with lower than 1% of volatility. Today will not be number 7 because it has just risen above 1 to 1.03%. And since February 17, there has been half as many days greater than only 2%. Can you find the 3? Well, this one was 6%. This one was 4%. This one, or 3%. This one was barely over 2, and these two were barely under 2. And in the overall scheme of things, this would normally look like if I was just ignoring price action on the right-hand side, and this, I know this is a silver daily, I would consider these to be 3-4% days. I really would. And what's really taken the cake is for 2 months, the market was showing how it could ride such an extremely tight, low, volatile uptrend. Well, it's only been a week, but oh my, this has taken the cake. This is about 70% less volatile of what was already microscopically volatile to begin with. Now, as far as price action is concerned, after this down move, a few days of going sideways, considering the volatility, massive volatility, but good upsize move that is followed with grinding moves higher, getting past the first Fibonacci point. It looks like it's going to take a move, a far one albeit, to the next level at 1787. This mark is 1% away. It could take 2 or 3 days to get there as the trend is playing out. So I'm just going to really emphasize the trend is low volatility. It's got to end at some point. So it could spark at one direction, and a big volatile move might just be 2-3%. But as far as it's going, it's doing it slow but sure. This 18 average is now flat. It's the first resistance test since the first leg lower. So far within it, of course, it's made a band go sideways. It's barely getting over it. And if it can extend it a little further, basically to the fib mark of 1787, then this area in at around 1760 will become very big short-term support. And of course, down to 1747. So the range of even 1740 to 1760 would become, even 1735 for that matter, that 25-cent range would become very, very big support. Let's move this on to Bitcoin. And the previous phase for this was a first band down test, which means it's the first time it's been going lower. It's had its test within it. The test has been finished, and the result of the test was a pullback. But the pullback generated a higher low. And we can see movement as went from below this 1,000 mark, barely below it, to about right now it's 1048, but close to the 18 average of lows in which is declining. So that's big. It's got that higher low. Any type of momentum to make a move, even to previous high, as long as it can continue the essence of trend, which is this line in here, and then it's of course just going to eventually break it. And I got 3 levels of Fibonacci that I find to be very important. And to say current price action at 1048 is a big level would be an understatement. The first one is from this low in at 750 and this high at 1298, which has the first, this key level here. Everything here is bullish, bearish, neutral. So the price action has went from the neutral stage and trying to get back into bullish. That's what that time frame is telling me right now. It's got decent momentum, but it's got a lot of work to do. The next key Fibonacci, the one I was talking about yesterday, from this high to this low, it's got numbers in at 1007 and 1048. And yesterday, this 1007 number, well, guess what? Right where it was supposed to do. Piercing below, like I usually say, it will more often than piercing above. And now it's making that move towards the next move to the upside. Actually, it's from this high to this low, actually, excuse me. So from this high to this low, it's in this type of movement. So it's got neutral from here to here, breaking out above as well, just like on the more longer term, showing bullish reaction. And now the Fibonacci from this high, excuse me, to this low is 1054 and 1129, which means its last bearishness that it's got to deal with is trying to get out of it now. As everything above this previous high would be making things go bullish again. So short term, more longer term, everything from here to here is bringing bullishness behavior. And of course, there's going to be a resistance mark here. But breaking that will put the third level into bullish behavior, which gives good reason for a fast move, probably up to this level, and who knows what kind of bullish behavior could continue or even move within that faction, because you're going bullish, bullish, bullish in the span of one day, if of course that action is to take place. Back to the essence of trend. You see this trend line breaking down. You see price action failing below that key 1K number yesterday. Then this pattern is showing these lower highs, and the higher low yesterday is going to be nothing more than a higher low on the shorter term time frames, and what ultimately will be the next test of the previous low in here. So anyway, that will end the video. I hope I didn't confuse it too much on the second Fibonacci mark, but I think I got a lot of it cleared. It's key point, looking to break out, very probable to do such with resistance in here. So ideally, a move up to here, maybe some sort of pullback down to 1060, 1050, and then the break above is the ideal move. But the markets are going to move as the markets are going to move. Nothing else you can do but to understand how it's going and make the best decisions based on its movements. Take care.